Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. What a crazy day. We've been in the midst of this corrective process for the past 2-3 weeks. We've had different spots that we've traded, that we've measured, starting from when we broke the 8-21 day and then broke the 50 day and then, tested the 150 day and then retested the 50 day and then came back down and, broke the 150 day and then all of a sudden, early this week we gave up the 200 day, and then today, all of a sudden, boom, futures down 10 handles, down 22 handles, and luckily, none of us have much risk on because there has been no reason to have much risk on. Whenever everything's below the 8-21 day, we tend to be out of portfolio approach and in some kind of, tactical approach, whether it means trading for red dog reversals versus lows, playing for extreme moves, selling some, seeing if it holds, whether it's getting short that H sell setup, which has also been working, or just not doing much at all and being out of the way and waiting for some kind of extremes, real extremes. So I'm just going to go right into the charts and give you visuals because I'm a visual type guy and you don't want to listen to me blabber. So you go to the spiders and you just try and look at what we know and what has happened. And you get our little trusty line here. And obviously, we do a lot more than just look at these things to interpret the action. That was your push-through failure. Here's when we did not hold the prior high, all bad momentum signals. Then we broke below the 50-day, hovered below it, didn't retrace it, didn't engulf it quickly like all the times in the past. Then you measure one trend, and the active trend that we first look at, because you have to look at each step at a time, was when we broke this pivot right here. This was actually as we entered, I do believe, the new quarter. We started talking about it. Actually, that was a little lower. That was right there. But, retest lower, held the 150-day for a few sessions with some nice trades in the middle of a little red dog reversal here, a red dog reversal here that gave you 3 days. And then, remember that engulfing move that pretty much got us all out of everything right here? And then, boom, you had your extreme into a hell of a day today. Here's your 200-day. That's what we're below. Now the question is, was today enough, to give us some kind of, multi-day move? So you go to the weekly chart. Let's just go to the weekly chart because, I posted this morning showing where a 10% correction would be, and basically got pretty darn close to it. Okay, I think we were down 9% or so, for the year from the highs, and this right there was 181.44-ish, okay, and we got pretty close. So if this is the trend line from that 2011 low, okay, which we do look for points of reference, that's pretty much, where we bounced off of. But the problem here, with taking massive overnights because we had a reversal or whatnot, go back to the daily chart, is because of the size of the travel range. This is one heck of a travel range. If you draw it across, where it could come back and pack and fill a little bit within this, okay, and before trying to retest maybe the 200-day or whatnot, and that could be painful. That's why I don't think anyone took massive, longs. Like, so remember here you had this red dog reversal, and it gave you a nice, another move, to test this moving average in the 50s. So you had a 3-day move from a pattern like that, where here, who knows what happens next? Who knows if there's another Ebola type of headline, which I know we're going to be dealing with a lot of them. But the one thing is you go to basic studies, okay, to look at the volume today, because we like to look at volume, and look at the size of the volume here. Somebody covered and might have gotten long to put a support in this market down here, where you do have some nice support right in front of a trend line. So that type of volume, if you come back to me, is usually an indicator that could mark a short-term bottom. Doesn't mean we revisit it. It doesn't mean that we, could be down 10 handles tomorrow on the Netflix, poor earnings. It doesn't mean any of that. It doesn't mean we could be down 20 handles tomorrow on another Ebola headline. What it means is today you had massive volatility, and there was definitely a lot of opportunities if you were trading it, especially from a long position, measuring commitment to the move. I know the first move we talked about, on the VTF, I came in flat, I started buying below 186. And I'm like, I'm going to try and be a scale-in buyer from 186 down to, I put orders in all the way to 184.5. not knowing we're going to get all the way to 183.5. So I don't even think I bought more below that. But I got it quick enough where I traded out of it and made money in that first move because I didn't start too early and I wasn't trapped from the night before. So that's how you trade the extremities of that envelope, we call it. Let's go to the 5-minute chart. You go to the 5-minute chart just to see. Let me take the volume back out again. Remove volume so you could see it. Just so you could see, how you could have maneuvered this because, without anticipating. First of all, this was your first move, okay? And gave you a nice wide range bar. So if you missed that, it held above it to give you an additional move. But then, when you looked here at 10:15, you're like, wow, the financials are still weak. High beta tech is so far off, still down. There's not much that's going to take us to here. I know oil stocks are kind of, perky, and so are the OAHs and so are the Russell, but just didn't feel it. So for me, I took a lot of the trade off, and then just like I normally do when I go to the gym, I said I'm going to give myself a stop. Okay, so I gave myself a stop, I think right here-ish, and that's when I got stopped out of the last little piece. So I caught the move, calculated fast, furious, got out here, went to the gym, and by the time I came back from the gym, okay, for the minutes, we were already here, right around there. So I wasn't going to cry and be like, oh my God, I missed the move from the low. What do I do now? Let me just short it. I said, okay, we broke this somewhat downtrend. You had a low here. You saw some commitment to it. So I got involved. Actually, I think it was right around here. No, I'm sorry. I got back here, okay, and then this happened, and I think this was my first long. Got a second long, traded out of it, and then played the close. So it was kind of decent. And I did take some home long, so tomorrow I'll have to deal with, I'll write support 1, support 2, support 3, see if there's any commitment. Hopefully, we hold this little area tomorrow, okay, because this is where we came from at 3 o'clock, and then see some kind of continuation up. If we don't, and this doesn't hold, I'll probably, sell out and say, okay, I shouldn't have taken an overnight. I haven't had overnights in a while, and it's been much better to go. And this would be, I guess, your real line in the sand. So support 1, support 2, and then we'll see if we can take this out for, maybe a gap fill. Okay, but this was a huge move off the lows. So that's how you could have played this. First move up, and then got out when it faded, or maybe even shorted, okay, the bounce, or shorted this, or shorted when it broke below this, because that move was actually even further than my little scalp trade to the long side that, definitely was a little scary for a second, because if we didn't bottom here and we bottomed down here, I don't know if I would have been able to stay involved, but that's a risky take. So spiders closed pretty well, big time travel range. We'll see what's next. Lots of trades going on here, so hopefully you've been involved. So where was the relative strength? The relative strength was in the XLE and the OAHs, which have been obliterated. Okay, so now what do you do here? Kind of difficult. We've seen this a few different times before. Okay, first of all, I like to show, just in case you're new watching, what you could have seen. Where here's when you broke this upper area, your momentum area below the 821 day. If you missed that, you then had an ascending channel back to it, and it broke. Then what did it do? It broke the 200-day, stayed below the 200-day, and then boom, or boom, whatever you want to say. So the question is, does this red dog reversal, hammer bottom, give you the right to take home some long? Well, if you did that here, okay, you got engulfed very fast. If you did that here, you get nothing done. If you did that here, you had one extra day. So down here in the hole, away from all these moving averages, is it worth a chance? It's worth a small chance. Okay, and that's why I took some home. It's one of my longs. And you go to basic studies, you go to volume. Let's see what the volume was like. Look at the size of the volume there. You would think, we can get a move back up to here. So what I'll do for tomorrow for a gap down, which we could be, say what would I want to see as commitment to this move. And I guess, we've talked Fibonacci retracements also. Let's see if we have them in here. That my little, there it is. So if you want to see some commitment to this move, I'd like to see it hold the top third. Okay, so from here to here, okay, that would take you perhaps to right around, this 79.40. Okay, so you write down 79.40, 79.60 if that's where it opens for, a buyable higher low. Okay, so let me just draw this and then get it out of the way so you could see it. So that's really, right here is where I would hope it would hold. Let's make it a little bigger, maybe you can see it that way. Let's take the volume out again. Remove volume. Okay, so now you can see it a little bit better. So the Fibonacci retracement to this move would be somewhere around here. Some might even wait till the 50%, which would definitely hurt a little bit more. You know, and then here is where it's like, okay, this is just a range crap, not, you know, bad overnight, and, you know, that's your last line of defense. So, you know, hopefully, you know, you get a little bit of follow through. Okay, that's what we like as traders, is a little, you know, follow through. It's like, what is the mother's milk? So what does Larry Kudlow say about profits? The mother's milk of corporate whatever. Well, the mother's milk of trading is follow through, and we'll see what happens here. If we were to get another update tomorrow, okay, and it opens down a little bit, maybe buy a little bit more above this high, and we get a little bit of a retracement. But overall, you know, we'll see what happens. OAHs were the strongest sector today, after being absolutely annihilated. And you did get a red dog reversal day one. So what we call it a day one, after breaking this, after breaking this, after breaking the 200 and staying below. So you have a day one. So if you made money today, what I would say the good book would tell you to do, if just say you had, you know, when it came back above this for a red dog reversal, just say you had 2,000 OAHs, you take home 700. So this way, if it engulfs it tomorrow like it's done all these other times here, or here, or here, you don't lose your day today, but you lose a little and you try the trade, just in case there's follow through tomorrow. You go back to here and you go back to basic studies and you put your volume in to see, was there volume attached to this red dog reversal? Yes. Okay, there's been a lot of volume down here, so we'll see. And obviously, oil had something to do with it today. The USOs, you know, big 2-day volume, doji, not actually a big time red dog reversal, whatever, but could mean the momentum to the downside from here is slowed and you get a little bit of a bounce. A little bit of a bounce would be nice. We'll see. So, where were the stocks? You know, yesterday I tweeted with one of the guys from All Star Charts, and we were talking about how Apple seemed vulnerable. That if it broke the 50-day yesterday, if it breaks below the prior day's low, you know, it could go lower and still be okay. You know, so maybe you made some money short that. I stayed away. I didn't buy it or trade it once today. You know, you go to the chart here of Apple. You know, let's take the volume out again because it skews the way I like the things look. And Apple broke, came off of it, so hopefully, you know, you took some money. Broke this upper trend, which also helped the market really get hit. This was your trend line. This was closing below the 50-day. Here was your short trade if you took it. Came off the lows, and now it's just a little bit different. It's not as strong. I wouldn't be expecting it to make a new 52-week high in the next session or so. Maybe after earnings, we'll see, whatever. But this was a tight pattern that broke below the 8 and 21 days. So if you were riding this for it to stay above the 8 and 21 day, that was your route. That's why I haven't been long it the last 2 sessions. Last time I actually was long it and looking for a swing was on this day, and then it failed here, and I think I got out somewhere in there, and I haven't really touched it since. So you'll see what happens there. Twitter was one of the strongest high beta names today. Okay, look at this engulfing bar. Red dog reversal took back 47.08. If you went with that, congratulations. Maybe it has a little bit more room. You know, Facebook also decent, not great, but this is something I took towards the close. You know, held the 50-day, didn't get to the 150-day, didn't get to the 200-day, showed some relative strength, has a small descending channel. So I thought maybe if we had some kind of follow through tomorrow, this would be in the cards that if it opened lower, I would be buying it through here. First time I've revisited Facebook pretty much since breaking this zone here. You know, actually since this day, I don't think I really have traded it since. So we'll see what happens. Doesn't look so great. Google is probably the weakest one today. Came off the lows, but you know, ever since I've been looking at it, it's just been such a hard trade. And then this was the last straw when it broke below the 8 and 21 day, and it's off the lows, but still big travel range, very loose and wide. Below the 200-day now, so there's showing no relative strength. It's not like Facebook that's at the 50-day. You know, or Twitter, this is well below, so it's just like do what you want to do with the trade, and we'll see what happens. I did think it could have been something very strong, or a candidate to break above this, but did it break above this? No. Did this cup and potential handle stay intact? No, it broke below. So we trade real time. You get out of it if that's what you were trading for. If you've been in it since 3 years ago, down here or down here, this doesn't really matter much to you. But if you're trading short term, looking for this pattern to actually give you a breakout trade, then you can't be in it. You don't deserve to be in it. You know, if you were in it again from here, from this past breakout, and you're fine. or that's your process. You're a long-term holder, not someone looking for a breakout above 608, because that didn't happen. Know what you're doing and know why you're in it. Baidu is pretty strong today, but again, it's just a trade. This was the upper channel that wound up breaking to the downside. It did give you a red dog reversal today and closed pretty strong, so that could be a candidate for more. But again, these things from day to day, they change. Netflix, when they reported, I was like, wait, that can't be the real number. That can't be the right number, et cetera, et cetera. And I think everything was bad. Don't know exactly where it is trading after hours right now, but here is the 200-day, which is around 413. I think it's well below that. And then here is where it broke out from, which was about 360. I think it broke this, after hours when I was walking in here. So it doesn't really have much in here until there or here. And I think this could put some pressure on high beta tomorrow if that number was real and it's really down 50 to 60 bucks or 70 to 80 bucks. But shows you the danger of the market. I do not take stocks into earnings, and most people in my community don't. If you traded it with options, hopefully you had either the calls, okay, if you were looking to be long it, so this way risk is premium paid, or the puts. If you had the puts, you made a lot of money. If you sold calls naked or sold puts naked, you know what? You might be in trouble. That's why I do not do that. One of my strategies I do not do, but talk to the Wiz. The Wiz has all his option strategies. He knows what he's doing. For me, I do not like to sell naked calls for a small premium, because if there's that black swan event, it could take you to the cleaner. Same way I don't like to sell puts and take in premium, especially, I'm doing it for an options play, because if it gets absolutely annihilated, that $2 or $4 you took in could turn into a $30, $40 loss or something like that. So I do not do that. The only thing I do is I take some calls, or I take some puts, or I may buy a straddle if I don't know which way it's going to go and I think it's going to be a huge move, but I rarely do a straddle because volatility is so high, or I do a call spread or a put spread to help finance the calls, but I never, or I don't think in my memory that I remember selling calls or selling puts, because sometimes you sell calls too. Like I remember the Facebook earnings when it was at 27, people were like, I'll sell the 30s or the 32s a month out, it'll never get there. And you know what happened with Facebook? It friggin' took off out of, and people got crushed. So don't put yourself in anything to pick up quarters to friggin' get, run over by a stream, roller. I think I've heard that somewhere. The banks came well off the lows. Goldman Sachs is coming out with earnings tomorrow. Hit the 200-day, and wow. So we'll see what that says tomorrow. This morning I said, be careful with Bank of America. It's probably not enough the way the landscape is, and it got crushed also. It broke this level real fast that I had in my Redler All Access note. I haven't been long the banks in days because the banks have shown me nothing. Here was, your breakout failure. This is when it broke this trend in there, and I think that's kind of when I got done with it. So now we'll see what happens. It's broken. It's going to need time. But again, if you've been in Bank of America, you go to the weekly chart ever since we started talking about this thing at 10 bucks, doesn't really matter to you that much. If you were playing for a move higher in the S&P and a move, and it was above the 8 and 21 days since breaking out here, that was your stop. So the most important thing is knowing why you're trading things. Know why you're in it, know what your time frame is, and know what your risk is. And then when the trade changes, you change. A lot of people were on me like, oh, Red Dog, you haven't been short for the last 2-3 weeks. I'm like, you know what? I'm kind of near the highs of my trading year, and I've been primarily long, and I didn't get caught, and I have an even keel thinking head moving forward that could be very opportunistic. In like a day like today, that actually was a pretty good day. And and that's my style. Could I have been playing both sides of the market and shorting all those pivots and pressing and yeah, but I guess with all the things I have to do as your offensive coordinator, doing charts, doing videos, going on TV. I'm going to be on Fox Business on Friday, doing webinars. I can't be as involved, so I'm involved in things that I can control, things that I could trade the first few hours and maybe hold and put stops in, and then figure out what the complexion is to see what I want to do the following day. So that's what I do. That's my job, is figuring out how I can handle my day in a way that I don't go cuckoo, and I'm feeling pretty good. We'll see what happens tomorrow. We're going to probably have a little bit of a down open, and I have some leftover longs, but I think it'll be all right. After today's action, maybe we open up down and go green. If we open up down and we're weak, because if you remember what happened here, I think a lot of us went home long on this day. Okay, remember this day? I remember it very vividly. It was a little bit different. This is when it felt like we rallied back up. We were going to reclaim the trend line, and the next day we opened down like 7 handles, and then we didn't look back. then people who, cost averaged in and said, I'm going to be long because of this bar, they bought, and then this happened, and who knows what happened to them. So for tomorrow, if we open up down, and in the first 30 minutes really can't hold, the top end of this, then I'm just going to get out of the way. And then if we go lower, whatever, it didn't work. If we open up, I'll sell a little bit. If we open up, a little bit down and some things go green and we trade above this, I'll do a trade like there. But again, one thing, everyone, if you know my history, being on Fast Money for like a year and a half and then getting into a fight with Terra Nova and Tim Seymour, and that kind of got me off it, besides being on Bloomberg and other networks and having this show because they all want original content. You're not supposed to do videos if you're going to be doing content for them. So I'd rather do this for all of you and talk as much as I want and not have reporters chirping in as if they know everything. But anyway, he was on TV and he's like, listen, people are like, well, do you think, the rally's off or we're going to make new highs on the year, And he was like, listen, he goes, I don't know if we're going to make new highs in the year, but as a trade with the action today, the trade would be, buying in the hold today for a potential trade back to the 200-day. And there's a lot of money as a trader to do that. And then if it does that and you cover today, we get back to the 200-day and failed like we did on the 50-day at 1976, you get short there and then you trade the range lower. So there's things and ways to navigate at extremes. And that's what people have been doing to have success. They've been navigating at extremes and trying to not do the noise and play to their strengths. And that's what we're trying to do moving forward. We'll see what happens tomorrow. What is today? Today is Wednesday. Tomorrow's Thursday. Hopefully you've been trading them well and on the right side. And again, the cash is a position, and we'll see how we handle the next phase here. The longer we stay below the 200-day, like the DAX did for multiple months, chances are we do make a leg lower and at least test that 10% move, which was about 10 handles below today's low, and maybe even go lower. But today, put in a high volume, move off the lows with some participation by the Russell and the oils, and we'll see if that continues, and we'll measure that with our retracement rules tomorrow. Have a good night.